All right, Nikki. Interest rates, interest rates, interest rates.
Welcome back. Let's dive into part 3. You ever feel like banks and lenders are speaking a different language when they talk about interest rates? Well, today we're translating it into plain English with Nikkie Taylor. Should you lock in your interest rate now or should you wait? What extra fees should you actually care about? How much is this whole thing really going to cost you? These are the kinds of questions that most people figure out after they've signed the paperwork, but not you. You're getting the inside scoop before you make a move, so let's go.
All right, Nikki. Interest rates, interest rates, interest rates. So how do they impact my loan?
So great question, and this is always the question we get, right? Everyone wants to know about this. So interest rates are going to be very dependent on your credit scores. So they're directly correlated to that. So right now they're in the low to mid 7s. I can tell you for FHA, your credit score is going to, you can have a lower credit score for FHA, but the interest rate's always lower for FHA as well. So you're looking like 6.5% there. But as I always tell people that are worried about interest rates, you do not want to wait to purchase a home, because what happens is demand starts growing. Family's going to have multiple offers. Price of the homes are starting to go up already. If you're paying $20,000, $50,000 more for a home, then you want to go ahead and do it at the 7 whatever interest rate right now, because if you have to pay more for the home, your payment's going to go up because you're spending more on that home.
So important, when all things need to come into fruition and take into consideration and factor that if you want to get into a home and you can afford the payment, just go with it now versus having to compete and pay more for the home. And if we start getting into that multiple offer situation again, where you're offering even more for what they're asking for, your payment is just going to be so much more higher.
Correct. And we also offer, you can buy down the rate on any of our loan programs. So if you're concerned that, that interest rate's just a little bit too high, I have several options for you always to purchase points, meaning that buy is a one-time fee that's just added to closing costs, and that helps your interest rate be lower for the term of the loan. So, say for $2,000 at closing, you can purchase a half a point. I'm just putting an example out there. And that stays that lower payment at that rate that you chose on a 30-year fixed mortgage, if that's the loan program you chose.
Awesome.
So there's always options.
That's perfect. I love that you have that availability for them. So for instance, that would fit perfect for a current home seller that's selling their home. They have a lot of equity in their home. They can use those gains not only for their down payment, but use that additional funds to buy down that rate.
Yes, correct. And when I talk to buyers, we also talk about what your budget is for your monthly payment. And we'll start talking about buying down the rate and if that makes sense for you in the long term, and how much it's going to take you how many months it'll take you to make up that payment that you're using for the point. So if you spend $2,000 in your monthly payment, how many months is it going to take you to recover that so that it's your break-even point, right? So that you feel good about that and you have your monthly payment where you want it to be.
I love how you explain that, because a lot of times when we are thinking about buying down the rate, you got to take into consideration how long you're going to be at the property and if it makes sense to pay that up front, because basically what you're doing is you're paying that interest up front at the time of closing so that you can save it with your monthly payment down the road.
Yeah.
So you shared a lot of great insight on that last question, and another great one that sometimes me as a consumer, as a buyer, and even my clients ask, like, how quickly should I lock my rate or should I float it? What are the pros and cons to those?
So I think that once we have the purchase contract and we know what your closing date's going to be, and that's a pretty firm date, then that's when we know the term of how many days you're going to need to lock in your rate. Say it's a 30-day closing, 45-day closing. I would definitely recommend locking in your rate. It's a very volatile market, as we know, and everyone is, very concerned with interest rates going up and down. And what if I lock now? And what if the rates go down? Well, I can tell you we have lenders that I work with that will help with that. If rates go down by, say, half a point, they will float it down for you at no cost. Sometimes there's a cost involved. It just depends what's happening with the market. But I always recommend to go ahead and lock in the rate, because if you float the rate, meaning that we have not locked an interest rate, then that rate can change, and the day you lock it is dependent on what the market's doing. So rates can be much higher, and you cannot go back to the last day. So it's current market, what that rate is that day, and at that time, if you float the rate and decide to lock it in. The market also changes several times through the day, so there can be reprices up or down every single day. So it's very it's a gamble. It definitely is, but I would definitely say lock in the rate. The only time I would say not to is maybe if you have a 60-day close, because if we have a 30-day rate lock, that's going to be a better interest rate than say a 60-day rate lock. So 60-day, I might say, you know what, let's take a little time. Let's kind of watch rates and see what happens over the next, few weeks and go from there.
Okay.
Yeah. If it's a new build, you definitely don't want to lock in any interest rate because we don't have a closing date yet. And as we all know with new builds, closing dates can shift depending on, supply and demand of getting product in, weather, anything.
Anything that can impact
So we
that.
don't want to, for a new build, absolutely do not lock it in until we have an actual closing date from the builder.
These are some great pointers. So just know, listen to what's happening depending on your time frame, and if you do have that 30-day window, definitely highly recommend to lock it. And if you have longer, then you have a little bit of more time. But again, everything involves risk, and you need to understand that risk depending on the situation.
Yes.
So now that we have our interest rate locked, what are some additional fees that we could discuss or we need to be aware of when it comes time to close?
Great question. So there are a lot of extra fees involved, and these are necessary fees. There's really no option for negotiation because these are considered third. So basically, we work with the title company to close your loan. They're going to have their own closing costs involved. They have to do a title search. They have to pull several policies in. There's taxes involved with that. In Florida, we have transfer taxes on the property. So they have their own set that comes to closing with us for fees. We also want to talk about your taxes and insurance. So your property taxes, depending on what month you're closing, will be due at closing. I say depending on what month because once the seller's lived in the home for a certain amount of time and they have already prepaid their taxes, then you'll get a tax proration based on that. So that's really dependent on your closing date of when you're how much taxes you have to bring to closing. And then your homeowner's insurance. You are free to shop for your own homeowner's insurance policy, but anytime you purchase a home, there is 1 year that you do pay up front at closing or to your insurance company directly. And we just get a paid receipt stating that you've paid that 1 year. And then you also have to bring about 3 months to closing if you're doing an escrow account. So that helps just start your escrow account so that next year, when your bill is due, that the lender has enough in that account to pay out that bill in full again, because your homeowner insurance is typically due 1 time per year.
Okay.
You also have interest on the loan, so that is calculated on your loan amount times your interest rate and how many days left in the month. So basically, if you close on the 15th of the month, it goes from the 15th of the month to the first day of the following month. So you have 15 days of interest there. And I think that's about it.
That's awesome.
Yeah.
And all these figures will be discussed with you at the time of closing before you sign so that you're fully aware of what you need to bring to the table,
Yes.
what's going to be due, and all the different amounts and who gets what so that you guys can have a successful closing.
Yes, and when we do a pre-approval, I actually will give you an estimate of all these fees so that you have a rough idea of what's going to be due at closing. And I always let everybody know that these fees will change slightly depending on, the title company once we get all their fees in, once we know exactly when you're closing, once we get your homeowner's insurance policy, the taxes. Once everything gets defined and we have a better idea, then that's when Tammy said we will send you an actual closing disclosure stating what the final fees will be. But I like to at least give buyers a heads up in the beginning of the process so that they can feel comfortable with how much they could be bringing to closing.
And I love that. And that's why it's so important to set the expectation, just set what we're going to be doing so that there are no surprises later down the road.
Yes.
Full transparency.
All right, now you know what's what when it comes to interest rates and fees. No more getting blindsided at the closing table. Now, for the final part of our series, we're covering the one thing that can make or break your home buying experience: underwriting. What is it and what's important and what buyers keep screwing up that gets them denied? So if you're serious about buying a home, you know what to do. Subscribe, drop a comment, and let's wrap this series up the right way. See you in part 4.